While Americans lose money chasing stocks, Japanese investors quietly turn $500 monthly into millions using this 400-year-old system. You know that feeling when you check your investment account and somehow you've lost money again? You bought the stock everyone was talking about. You timed the market perfectly. You did everything the financial gurus told you to do. But your portfolio looks like a roller coaster that only goes down. Meanwhile, there's a 45-year-old office worker in Tokyo named Kenji, who's never earned more than $50,000 per year, never picked a single stock, and never tried to time the market. His investment portfolio just hit $1.8 million. What's the difference? While Western investors are playing a game of chance, Japanese investors are playing a game of certainty. They figured out something that Wall Street doesn't want you to know. Building wealth isn't about being smart. It's about being systematic. The Japanese approach to investing is the complete opposite of everything you've been taught. No stock picking, no market timing, no complex analysis. Just a simple system that works whether the market goes up, down, or sideways. And the crazy part, it's so simple that a 12-year-old could do it. But here's what makes this approach revolutionary. It's designed to work with human psychology, not against it. While Western investing fights your natural instincts, the Japanese system works with them to build wealth automatically. Here's what separates Japanese investors from everyone else. They don't try to beat the market. They let the market work for them. The Japanese investment philosophy is built on 3 principles that go against everything Western finance teaches. Principle 1. Consistency beats brilliance. While Americans are trying to find the next Apple or Tesla, Japanese investors buy the same boring investments every single month, regardless of what's happening in the news. Principle 2. Time beats timing. Instead of trying to buy low and sell high, Japanese investors understand that time in the market beats timing the market. They start early and never stop. Principle 3. Boring beats exciting. While Western investors chase the hottest trends, Japanese investors focus on companies that do one thing: pay the money consistently, year after year. This isn't about being conservative or playing it safe. This is about understanding that real wealth is built through compound interest, not home runs. And compound interest requires 2 things: consistency and time. Here's the psychological breakthrough. The Japanese system removes all the emotional decisions that destroy wealth. No more wondering if you should buy or sell. No more panic during market crashes. No more FOMO during bull markets. Just systematic wealth building that happens automatically. So what exactly do Japanese investors do differently? They follow what's called the Ichiman system, named after the 10,000 yen note. Here's how it works. Step 1. Automate everything. Japanese investors set up automatic monthly investments before they even see their paycheck. Kenji invests exactly 50,000 yen, or $375, every month, whether the market is up 20% or down 30%. This removes all emotional decision-making. Step 2. Focus on dividend growth. Instead of chasing stock price appreciation, Japanese investors buy companies that increase their dividend payments every year. Think boring businesses like utilities, consumer goods, and real estate companies that pay shareholders consistently. Step 3. Reinvest every dividend. Here's where the magic happens. Every dividend payment automatically buys more shares, which generate more dividends, which buys more shares. It's a wealth-building machine that accelerates over time. Step 4. Never sell during crashes. When stock markets crash, most investors panic and sell. Japanese investors see crashes as sales events, opportunities to buy quality companies at discount prices. They keep investing through every downturn. The beauty of this system is its simplicity. No complex analysis, no market predictions, no emotional decisions. Just systematic investing that compounds wealth over time. But here's what makes it truly powerful. The system gets stronger during market volatility. When prices drop, your monthly investment buys more shares. Your existing shares become more valuable. You win either other way. Let me show you exactly how powerful this system is using Kenji's real numbers. Years 1 to 3, the foundation phase. Kenji invested $375 monthly, $13,500 total. Portfolio value, $16,200. Annual dividend income, $520. This phase feels slow, but you're building the foundation for exponential growth. Years 4 through 7, the acceleration phase. Total invested, $31,500. Portfolio value, $52,800. Annual dividend income, $2,110. The new compound effect kicks in. Your dividends start buying meaningful amounts of new shares. Years 8 to 12, the momentum phase. Total invested, $54,000. Portfolio value, $118,600. Annual dividend income, $5,930. Your dividend income now exceeds your annual contributions. The machine is working. Years 13 to 18, the explosion phase. Total invested, $81,000. Portfolio value, $267,400. Annual dividend income, $16,040. Compound interest becomes unstoppable. Your money is making more money than most people earn at their jobs. Years 19 to 25, the freedom phase. Total invested, $112,500. Portfolio value, $487,300. Annual dividend income, $29,240. You've created a money machine that pays you whether you work or not. Here's the mind-blowing part. Kenji invested $112,500 of his own money over 25 years, but compound interest created an additional $374,800 in wealth. That's the power of the Japanese system. Your money does most of the work. But the real magic isn't just the total amount, it's the dividend income. By year 25, Kenji's investments were generating $29,240 annually in passive income. That's $2,437 per month in dividends just for owning shares in profitable companies. The Japanese system succeeds because it's designed around human psychology, not against it. Here's why it works when other approaches fail. Removes decision fatigue. By automating everything, you eliminate the hundreds of micro decisions that lead to mistakes. No more wondering if now is a good time to invest. You invest every month, period. Creates positive feedback loops. Watching your dividend income grow every quarter provides psychological reinforcement. Unlike growth stocks where you only profit when you sell, dividends pay you to hold quality companies. Builds wealth gradually. The system prevents the boom-bust cycles that destroys most investors. No massive gains followed by devastating losses, just steady, predictable wealth building. Focuses on control. You can't control market returns, but you can control how much you invest and how consistently you do it. The Japanese system focuses entirely on what you can control. The Japanese understand something most Western investors miss. Investing isn't about being right about the market. It's about being consistent with your system. And consistency is something anyone can master. Ready to start investing like the Japanese? Here's your step-by-step implementation guide. Week 1, set up your system. Open a brokerage account that allows automatic investing. Set up monthly transfers of whatever amount you can afford. Even 100 monthly is enough to start. Week 2, choose your investments. Start with broad dividend-focused ETFs like YVM or SCHD. These give you instant diversification across hundreds of dividend-paying companies. No need to pick individual stocks. Week 3, automate everything. Set up automatic monthly investments and dividend reinvestment. The money should be invested before you even see it, removing the temptation to spend it elsewhere. Week 4, ignore the noise. Delete financial news apps. Stop checking your portfolio daily. The Japanese system works because you stick to it regardless of market conditions. Month 2 and beyond, stay consistent. Keep investing the same amount every month, whether the market is up or down. Increase your investment amount when you get raises, but never decrease it during market downturns. Annual review. Track your progress. Once per year, calculate your total dividend income and portfolio value. Watching these numbers grow provides motivation to continue the system. The key is starting with whatever you can afford and staying consistent. The Japanese prove that modest amounts invested systematically create extraordinary wealth over time. Let's be honest about what this system requires and what it delivers. Time requirement. This isn't a get-rich-quick scheme. Real wealth building takes 15 to 25 years, but those years will pass anyway. You can either spend them building wealth or wishing you had started earlier. Discipline requirement. You must invest consistently, especially during market crashes, when every instinct tells you to stop. The Japanese succeed because they see volatility as opportunity, not threat. Return expectations. Don't expect 50% annual returns. The Japanese system typically generates 8 to 12% annually over long periods. Not exciting, but incredibly powerful when compounded. Lifestyle impact. You'll need to live below your means to fund consistent investing, but the Japanese Japanese prove the modest sacrifices today create extraordinary freedom tomorrow. The Japanese system works because it's boring, systematic, and patient. While others chase excitement, the Japanese build wealth through consistency and time. The difference between wealthy people and everyone else isn't intelligence, luck, or secret knowledge. It's systems. The Japanese figured out centuries ago that wealth isn't built through brilliant stock picks or perfect timing. It's built through systematic investing and the patience to let compound interest work its magic. Kenji isn't a financial genius. He's an ordinary person who followed an extraordinary system. He automated his investments, focused on dividend-growing companies, reinvested every payment, and never sold during crashes. 25 years later, he has nearly $500,000 and generates more passive income than most people earn working. You have a choice. Spend the next 20 years hoping for financial miracles or spend them following a proven system that's created wealth for centuries. The Japanese investment approach isn't about getting rich quick. It's about getting rich inevitably. If this changed how you think about building wealth, smash that like button and subscribe for more time-tested investment strategies. Drop a comment. Are you ready to start investing like the Japanese? Thanks for watching, and remember, the best investment strategy is the one you can stick with for decades.